Hey once again everybody, and welcome to part 2 in our video series on long-term care. If you have not yet watched the first video, Paying for Long-Term Care, be sure to check it out on our media page at www.soundwealth.net. Now that you have a pretty good idea of your options on how to pay for long-term care, let's take a little deeper dive on the different types of long-term care insurance policies that are available to you. Long-term care policies are generally divided into two main categories: premium-based and asset-based. Let's start by looking at premium-based policies. If you own a home or automobile, the odds are pretty good that you probably also have an insurance policy to cover it. For these types of property insurance policies, you pay a premium and the insurance policy provides an agreed upon amount of coverage for as long as you pay your premium. Premium-based long-term care works much the same way. You'll select a benefit amount and pay the premium for that benefit amount. As long as the premium is paid, the coverage will remain in place. This policy makes budgeting for your long-term care coverage simple. You always know exactly what your contribution to the policy is going to be and what your return on your premium is going to be should you need to elect your policy benefits. The downfall to this policy type, however, is that if you never need to utilize your policy benefits, your premium goes straight into the pockets of the insurance company with no benefits to you or your loved ones. Let's now look at asset-based long-term care. Asset-based long-term care is different from a traditional premium-based insurance product because it combines two different insurance products into one. Asset-based long-term care creates a policy that will pay for your long-term care benefits as well as paying any unused benefits to your heirs by bundling the policy on top of an underlying cash value life insurance or annuity contract. Essentially, you now have two policies in one. The first part pays out benefits for your long-term care during your lifetime. The second portion will pay out a death benefit to your heirs. Some contracts also allow the option to surrender the policy and take the cash value if you do not anticipate needing the coverage later, but may or may not include a charge to do so. The downside here is that this type of insurance generally requires a substantial upfront funding payment, but may be broken down into a few smaller payments such as a 5-pay or 10-pay option. For more information on these different policy types or a discussion on which might be best for your situation, reach out to our advisory team by calling 941-932-4822 or schedule your no-obligation consultation online at www.soundwealth.net, where Sound Wealth Management is more than just our name. Have a great day, everybody.